Well, equity futures right now are pointing to a higher open. The S&P may extend its biggest weekly rally since March 2009. For more, we are joined by Michael Shauol. He's the chairman of Marketfield Asset Management, oversees $1 billion, and also Dominic, of course, joining in on this conversation. And Michael, I mean, do you think we're hitting a bottom here in this market?
Well, I think we hit the bottom, a couple of months ago when the S&P hit 1075. I mean, that to me was an exaggeration to the problems which the US was facing. At the time, economic data to many people looked bad. You've had one of the biggest swings in economic data that you've ever seen. It's almost as big a swing as we had in 2009.
So you're confident that's the low of 2011 then?
Yeah, with 3 weeks to go, I'm sticking my neck out and saying we won't hit 1075.
Okay, just need to ask.
Now, if you look at the overall sectors, though, there's got to be underperformers and overachievers in this marketplace right now. As we head for the next 3 weeks here, stick your neck out there. What performs the best here?
I think the stuff which has done best so far this year, and technology and retail really stick out a mile as the two best performing sectors all year long. And energy has kind of come back into the picture in the last, in this last sort of rally phase. Energy, I think, has done surprisingly well.
But I've looked at the retail performance, just the retail sector overall in the S&P. I mean, it's outperformed the S&P overall. But, some might say, will it have run its course after this quarter? I mean, what's going to continue outperforming?
No, I don't think so. I think that there still are a lot of people out there waiting for the U.S. consumer to roll over. We heard this whole idea of the savings ratio being down and therefore the consumers are about to run out of money. Really, until people start to talk about, really a consumer boom in the United States, and consumers spending too much money again and everything being great, I would be patient with retailers until you see those sorts of headlines.
But once you hear that, then what would you do?
Then you probably start scaling back and looking for another story. But I think that's weeks to months away, not days away.
Now, well, Betty and I, we were just talking about this idea that the bank stocks, have been some underperformers here. They're at the heart of what's happening here with the consumer, everything else here. What do you think about the bank stocks as we head towards 2012?
Yeah, you see, I don't think the banks are at the heart of what's happening to consumers. I think you can have good consumers and bad banks, which has been the story of 2011. I do think the banks will have some kind of a bounce off their absolute lows. But if we're going to have a bull market, and a bull market which takes the S&P well beyond its 2011 high, which is really the only kind of market worth investing in, I think it's going to have leadership. And the leadership is not going to be the financial sector. It's going to be something else. And
technology?
Technology, yes. Retail, yes. Maybe energy. I mean, those are the three sectors which really have indicated that they'd like to be leadership. The rest of the market, some of it will hang in there with the index, and some will really underperform.
So you don't buy this whole idea, though, that some have said, look, you can't have a sustained rally, though, without the financials leading that?
No, I think it's totally incorrect.
Okay. Europe,
yep,
which we talked about last time, you said that investors were starting to get bored of what is going on in Europe. But do you get...
Oh, well, then they got excited again about a day later. But,
exactly.
But yeah, I mean, look, what I think we saw in Europe 2 to 4 weeks ago was a massive liquidation in the secondary market of European sovereign credit. Large financial companies were literally lining up to tell you how much of this stuff they had already sold. Remember Nomura being on the tape. Obviously, MF Global's liquidator has told you that it sold everything that MF Global owned. It's not a surprise, therefore, that you saw yields, in Italy up to 7% and in Spain well over 6%. You've had something of a snapback now. There's yet another window of opportunity for the ECB and Europe's leaders to get together and come up with some kind of a workable solution.
But until they get the banks in order, I mean, this is sort of in the way like the financials here. Until they get the banks in order, though, Europe is not going to be facing any type of bottom, though, at this point, right?
No, I mean, maybe if you're lucky, you saw the lows in the equity market for a while, in the summertime. I don't think Europe's going to be the leader for global growth, and I don't think it's going to be the best place to be for investors. All it needs to do for the U.S. equity market is to simply get out of the way, to get off page 1 and go onto page 2 or page 3 of the newspaper.
So let's go from the developed markets, the U.S. and Europe, to the emerging markets. What do you feel about the emerging markets? Are they the place to invest?
No, they're the next problem. I mean, I think EM has been the worst place to be in 2012. In the summertime, you started to see emerging market data get a lot worse. Most people in emerging markets pointed to the U.S. as the reason. We now know that the U.S. is doing fine. There's a problem in emerging markets right now.
Everyone's been saying, like, the U.S. is the best house in a bad neighborhood, essentially.
I think it's a pretty good house, period. Yeah.
Okay, Michael, great to see you again. Thank you for joining us. Michael Shauol, the chairman of Marketfield Asset Management.